Wonderful. All right, I think we have our next guest backstage. We're going to keep things rolling and bring on Paul Gurney, the CEO of CBD of Denver. Paul,
Hi, Michael. How are you?
welcome. Doing
Thank
great. Thanks for joining us, Paul. How's everything going?
Thanks for having me. It's Friday afternoon in London. Sunny. For once, it's nice. How are you doing?
In London. There you go. Awesome. Awesome. Yeah, we are wrapping up the morning here. We're getting close to Friday afternoon, so I think everybody's in a good mood. Paul, we had the pleasure of having you at our Cannabis Capital conference in Miami not too long ago. We actually got to chat right after your presentation, so it's great to have you back here. For anybody who wasn't at the event, didn't tune in, give us a profile of CBDD. What do you guys do? What's the company all about?
Yeah, just to take it from the top. I mean, I've been the CEO of this company for 3.5 months now. We're obviously OTC listed company, and I came in from a banking career. I'd been working for a large Canadian bank, North American bank, for 15 years. I've been banking the cannabis sector for 4 years. And after speaking to a number of companies in Europe, I came across this opportunity called CBD of Denver with a 100% owned subsidiary in Switzerland called Rockflower that was doing 10 $14 million of revenue in a sector that didn't have a lot of revenue. Was really excited, made some trips out to see management, etc., and joined the company on March 1st. And the idea of our company and what we're doing is really to reinvent it. So primarily right now we're a trader. We're a CBD flower trader, commodity trader. It's very low margins, high volume, and it's great. It's been great to get into the cannabis sector in Europe because it's the next leg of growth in the world. But the idea of me coming in is, how do we diversify this thing? How do we add another leg to the stool, 2, 3 diversified businesses to make this, a real company and not just a trader? So, in the first month, 2 months, got to know the people, got to know the business. We've done a complete restructuring in the business we announced with Q1, which is behind us. We did some cost-effective moves to get the company back on the right track. And now I really feel like it's a great, investment vehicle for people who are looking for an exposure to cannabis in Europe. And if you look at actually the macro picture of cannabis and how it's gone, the U.S. is about a $25 billion market right now. Europe's only $1 billion market, and we're really at the beginning of a trend into adult use in Europe. There's been a wave of medical legalization over the last 4 to 5 years. In Spain this week just announced that they're close to doing it there. But in terms of having a cannabis play, a consumer play in Europe, I think we're the best opportunity out there for people.
Awesome. Okay, Paul, I want to dig back really quickly to the beginning of what you said there too. Your background in banking. Is there anything from, your previous occupation there that's translated over to give you any advantages in what you're doing now?
Yeah, so previously I was at the Bank of Montreal BMO, and in 2018 we were the main bank for the entire Canadian licensed producers, the LPs, the Canopy Growth, the Auroras, the Tilray IPO. We raised over $10 billion for the sector, and I did a lot of that capital raising over in London and over here in Europe. And what I saw from that, Michael, quite frankly, was just a lot of capital that got raised and misspent and wasted, and a lot of acquisitions that got made, a lot of costs that got added, and a lot of capacity that got built in Canada that now has been shut down. So, I position myself as the leader of this company, saying I've seen the cannabis sector, I've seen what doesn't work. I think I have a pretty good idea of what's going to work, and you can do that just by looking in the U.S. market what works and what doesn't work. I'm not a genius, okay? You can see from history what works. So from a banking perspective, what do I bring? Capital discipline. I understand share price, how it works, structure, how to structure a company, how to speak to investors, how to get a process in place to be a company that has, pretty standard reporting cycles. So that part of it to me was an advantage. And coming into a cannabis sector that I've been quite familiar with the last 3 or 4 years and seen the places not to go, I think it gives us a huge advantage in Europe as the sector continues to grow.
Awesome. Okay, all good background. Let's talk about some recent developments then and some of the news you guys have had. We're going to get some insight into the Australian hemp wellness brand that you actually just got the subsidiary Mellow signed with. What can you talk about in terms of this partnership with impact to the business? Is there anything significant that's going to lead to revenue growth here?
Yeah, so listen, it's going to be revenue growth. So just to give people the idea of what Mellow is, it was the first acquisition we made out of the gate in the first month I was in the company. I took a look at the business and quickly came to the realization that our marketing function was pretty much non-existent. And for any sales, customer facing business, you need a marketing function, and a digital marketing function this day and age is critical. So the Mellow team, it's been a great acquisition for us. Neil and James, I've known them in London for 3 years, so we came to an agreement and we bought them. And the beauty of what they do is they have this access into the whole CBD ecosystem, cannabis ecosystem, and customers around the globe, and touch points that we wouldn't have. So that that press release that we announced with the Aussie brand, I mean, they're looking for distribution. They're looking for a partner to bring them into Europe. They're not here yet. So how do they do that? And that's why they signed a contract with us, and we help them do that and do all the digital marketing. So is it a substantial contract? No, it's not like 10% of revenues. It's a decent amount of revenue for us, and it's one of those things that if we do well, it'll grow with us, and we'll be their partner for Europe. And they're a company that is well capitalized. They're down in Australia. They're planning on listing on the Australia exchange this year. And those are the kind of partners we can find and source with the Mellow team. And that's what I like about them.
Fantastic. Okay, in terms of other partnerships too, it's not just Mellow, but also the licensing agreement with the UK luxury CBD brand. What about details there? Why is this important for the business, and how did this come about too? What's the background there?
Yeah, so Oto, you wouldn't know it in the US. I mean, it is somewhat in the US. Oto, it's a luxury CBD brand. It's been one of a handful of success stories here in the United Kingdom in terms of CBD brand. They've really captured the high end branding side here in Japan and globally. So the Mellow guys have had a really strong relationship with them for a number of years. And again, Oto is doing really well. That's who we like to be partnered with, the brands who we can help continue to be successful. And so here's a brand that wants global reach. They're expanding into the US. They've already been successful in the UK. They're looking at expansion into Europe. That's right up our fairway. It's perfect for us. So those are the brands that we want. Those are the customers we want. We want to partner with CBD brands, other health and wellness brands who are looking for a company that cares about their success. And that's us, I think.
Absolutely. And you talked about the customers that you have too. When you're thinking about customer acquisition and the growth strategy for bringing in new revenue, is it sales? Is it more of these partnership style acquisitions and brands and licensing agreements? Or is it just you going out direct to consumer? How are you bringing in new revenue?
So it's an excellent question because we've, in the last few months, I've tried to really transition the way everyone thinks from a revenue model to a how can we make money out of a relationship? How can we create a win-win? And how do we generate profit? Because at the end of the day, this is a sector that's lacking a company that's profitable. And if we want to continue to be a going concern and not have to be one of these companies that continues to tap the market for equity, we have to find business relationships that make sense for us. So the top kind of frame or scan that I tell people to use is when you're entering a relationship or discussion with somebody, you need to think about how we can make money out of it and how they can make money out of it. So in terms of our funnel, we've eliminated a lot of the discussions with people where, quite frankly, it was very, very low margin business, like 2 or 3% business, and the math doesn't work on that. If you have somebody who doesn't pay a bill, then that's a loss. If you miscalculate something or someone doesn't pay you, it's a loss. So that doesn't make any sense to do 2 to 3% business. And also it creates a lot of internal work, processing invoices and paying things and that. So when I look at the future, okay, going forward, what are we going to be? Mellow, we're targeting clients who are successful, who want to be more successful, who are happy to share some of that margin with us, and we'll share with them in their success. And then in the core business, in our commodity trading business, again, it's the same setup. We're trying to look for partners where we can have a double-digit margin and a relationship where both parties win, not a heads I win, tails you lose kind of situation. So that's me. I'm only 3.5 months into setting the strategy for the company, but that culture I'm trying to establish is one that's different than the cannabis sector out there. Because when I talk to people from other cannabis companies, they come from a background of, Canopy was able to raise $5 billion. So there was never any cost controls in the company. There was never any discussion about what people made or spending money wisely. There was never, trying to think at the end of the month, what do we really have to spend money on in zero-based budgeting? There was none of that. They spent like crazy. So our culture is not going to be that way. We're going to think about every dollar we invest, every penny that we spend. We're going to think about it. And I'm not against spending because you can't cut your way to greatness, is what a CEO once told me. So to answer your question, it'll become much more clear in the quarters ahead as we start reporting, as we have 4 or 5 different business lines, what our priorities are. But I want a mix of margin, and I want 20 to 25% EBITDA margins. That's the goal.
Awesome. Okay, perfect. I want to dive into your Q1 earnings report and talk about a couple of things in here because you had some really interesting points brought out. You talked a lot about the acquisitions, the branding, and the move into Germany and some of the sales there. One of the quotes from you was about, on the surface, the numbers not telling the full story. They need to be viewed in context. The acquisition of Mellow and the further expansion into medical cannabis sales in Germany, we're well on our way toward achieving that goal. Talk a little bit about that expansion into Germany. What are some issues or some roadblocks you guys have faced, and what is the progress looking like there right now?
So again, it's about repositioning this company into areas, I think, where their economics make sense. Germany for sure is one of the areas we would like to be. So we're still getting started there. There's not really any revenue or anything to speak of there yet, but it's attractive, Germany, because they have a medical market that's 300 million euros. They have a government and a parliament that's positive about legalizing on the adult use side, and they're going to start regulation. So we want to get into Germany. We're still exploring the best ways and best regions to do that. But again, that's one of the pillars that we're looking at. And it's, how do we do Germany? Do we just have a sales force there? Do we partner up with a distributor? And we're talking to a lot of distributors in Germany. Do we partner up with a producer who has product that needs to be distributed in Germany? So I look at our core competency as, we're a sales organization, we're a distributor, and those are the discussions we're having with various producers, being like, you're a distributor, can you help us in Germany? And we're just trying to figure out what the right contract and right margin structure is for that to work. And for us being in Switzerland, geographically, Switzerland's right, below Germany. It's right there. And Germany is a massive rec market. It will be. It's 90 million people. So you need to be in there. You need to have a horse in the game. And that's what I tell my people. It's, try and find us a unique angle in there that doesn't require us to put a lot of capital in, so we can kind of test, iterate, see if it works. And if it works, we'll spend more capital. And if it doesn't, we'll pull back.
Awesome. It makes a lot of sense. And another point I want to dive into here and get your take on. The report also talked about the business being negatively impacted in the first quarter by the reintroduction of the COVID controls across Europe and the pricing pressure on the CBD flower. So obviously, as we sit here now coming towards the end of Q2, the U.S. actually just announcing this morning that we're going to take off the COVID controls for international travel. Where do you see the market heading after this? Do you think we're out of the woods with the COVID controls? Do you see that coming back and impacting the business? Where do you think the future lies?
I feel like we don't even really talk about COVID anymore. So, having to put that in the Q1 release, it was legitimate because the Germany in particular did have like another lockdown over the winter. So a lot of the kind of areas that we sell into were impacted. That's all been lifted now. Yeah, Europe's wide open, UK's wide open. There's no mask mandates. There's no vaccine mandates. It's as it was beforehand. So, in terms of COVID being an impact, it's not there. What happens next winter? I don't know. Your guess is as good as mine, but for now, it's business as usual.
Awesome. And another thing here, too, the European cannabis market update you guys gave. You talked about how the European market is at an inflection point. Cannabis reform, a question of how, not if. What do you see that progressing like? Do you see any roadblocks for that potentially? And where do you see the future of that over the next quarter?
It's like the analogy I give is like, imagine if everyone was like sitting in a circle, and that circle was the large European countries, and they're all wanting to do something, but they're waiting for someone else to stand up first. And once someone stands up, they'll all stand up. So if you look at it, like this week in Portugal, the left-wing bloc reintroduced some legislation on adult use recreational use in Portugal. So the governments around Europe, whether it's the UK, Switzerland, Germany, they're all moving slowly but surely towards opening the door to rec. There's no rec market right now in Europe. Switzerland has started some really small rec pilot programs, but they're for research and development purposes, so it's not a widespread thing. But what I talk about Europe is, it hasn't even started yet, and if it's Portugal who finally decides to get this through, then the other EU countries will take a look at it and say, okay, we should probably do this too. Um, do I know when that is? No. Could that be 3 years from now? Yes. 5 years? Could it be a year? Yes. But it's happening, and you feel it here when you talk to people. You feel the attitudes towards it changing. When you mention the word cannabis to the person on the street, they're kind of familiar now with what it is, and what the value prop is there in terms of legalizing. So I said when I joined the company, why I was excited and really excited about it is, within a year all these countries could flip, and then there's going to be a race. Governments move slowly, so I doubt that happens in a year, but it's coming, and I want to be positioned for it. And there's massive option value. And so us in Switzerland, we have a team I put together to start working on these pilot projects to get a license. We're going to have that angle on Germany, and then we'll watch the rest of Europe as it unfolds. But there's a lot of green space there.
Absolutely. Got it. And the last thing I want to touch on from the Q1 report too was the restructuring you completed in March to reduce costs, putting yourself in a stronger position for the next phase of growth. Talk just a little bit about how that's unfolded. How has the restructuring impacted the business? And the last couple of months, how has that played out?
Yeah, so you get into when you get into a new job and you take a look at it, you have to bring a different perspective to a business or to a team. I mean, that's why you've been hired. I tried to stress that when I first got hired and shareholders reached out. I'm like, well, just remember, I'm a new CEO. Like, I need to get my feet under me and understand what we have and understand maybe where we shouldn't spend money on things. So restructures are always a bit painful, but they're completely necessary. And my view is, you look at the data in the US today, you have inflation at 40-year highs. Like, it's a pretty choppy market out there. And I'm an optimist, and I hope it, improves in the next 6 months, but I don't know. So I would rather build a very, very resilient business that doesn't consume a ton of capital so that we can make it through the rough spots in the economy, because I have no control over the broader economy. And the restructuring was all about that. We reduced costs by 40%. We're still looking at things now, potentially reduce costs a bit more, but we've got ourselves in a place where we're cash flow break even. And, with these new contracts and things that we're working on, we can start actually generating some positive free cash flow and doing some more interesting things. So I made that point in the press release about the restructure, because people have to know that we've been doing something, and the reason we haven't been able to be out in front with press releases and talking to the market is I wanted 2 or 3 months to figure out what the business was and the direction I wanted to take it. And now I'm really confident we've got a really solid direction over the next 6 to 12 months. We've got next week, everyone's flying into Zurich. The mellow team's coming over. We've got 2 big strategy days to set all the targets for the next 6 months and really just start driving the business forward and move this thing.
Outstanding. That's awesome. 6 to 12 month plan, sounding solid there. You've obviously got a lot of things in the works. Let's, as a final point, take a look at a little bit longer down the road. The 5-year plan, the 10-year plan. Where do you see the future of the industry going, but CBDD along with that? Where do you see you guys heading next?
So it's 5 to 10 years. You're going to have like a adult use market in Europe that's going to be anywhere between 25 to 50 billion. Okay, that I can say with a high degree of confidence. So that is the long-term plan that we're working on in the background that you don't see, is doing these pilot programs in Switzerland, is working on the adult use side. That's one part of our business. The other side with mellow and how I'm repositioning that side is health and wellness, a huge health and wellness trend globally, over $1 trillion spent on health and wellness. CBD for me is part of a broader health and wellness regime. It should fit in there. And really, if you're a company in CBD, you should be in the adjacent categories, and you should have a total value prop for a consumer. So, 3 to 5 years, these might not be businesses under the same roof. You might have an adult use kind of rec business, and then you'll have a health and wellness business. But in 5 to 10 years, really bold up on Europe. We will get through this regulatory side of it. We'll have adult use guaranteed. And who knows like how that's going to grow and how that's going to develop, and whether it's going to be a license system or what. I don't know that, or how to monetize it, but I'm very positive for the macro of Europe and where we sit. And that's why I like being at CBD of Denver.
Fantastic. Paul, we love to hear that. It's Friday afternoon there in London. Enjoy the rest of your day. Have a wonderful weekend. Thank you so much for joining us on All Access.
Thank you. Thank you, Michael.